Trump, what are you doing?
Thank you, Trump.
This is horrible.
It's so red. Buy the dip. I'm gonna keep buying the dip. And we'll dip down. So on a serious note, this is my portfolio update for the week. I do this every week so you understand the ups and the downs of investing. It was all going really well last week until the wonderful President Trump decided to throw a complete grenade in the stock market. And we are going to come to that in more detail, and I'm going to tell you exactly why it happened the way it did. But before we get into Trump, the stock market, my portfolio, and what is going on, I've noticed that around 85% of you who are watching my videos have not yet subscribed. You seem to watch them, I'm guessing you enjoy it, but you've not yet subscribed. So can you please subscribe, comment? I value everyone's opinion. This is a group effort in a way. The stock market is partially manipulated, but it really comes down to a herd mentality. So please do comment below, please subscribe, and let's crack on. So what happened last week? Actually, what happened on Friday? So it turns out China has decided that on the 1st of November 2025, they will be blocking or limiting almost everything it produces. And this is affecting all countries, not just the USA. So in response to this, President Trump decided to post something on his social media platform, Truth Social. Just had to add, I think that's a really stupid name for a social media platform, but hey ho. And he has said that he is now going to place a 100% tariff on all goods coming from China starting on the same date, 1st of November 2025. So essentially doubling the cost of all the goods coming out of China. On top of this, the USA is also going to restrict critical software to China as well. So there's like a double whammy there, hitting China with tariffs and the restriction of software. President Trump called their move hostile and a moral disgrace. Really went in there with the powerful words this time. And because of that, there was a large pullback in the market. Now, I've seen bigger. It was 4% in total of a pullback. It's not so bad. I mean, look, when it initially happens, as you may have noticed from the start of this video, I was panicking. I was like, oh my God, what the hell is going on? And then it was, hold on, this is great. I can just get everything cheaper. Luckily enough for me, on Wednesday, I actually closed down a few of my positions and took partials, which amounted to, I think it was around $450, $500 in profit. And then Friday, this happened. So worked out well. Now I can buy everything a little bit cheaper. So on that note, let's dive into the portfolio so far so you understand exactly what is going on. So I have, for people that haven't watched this, 3 different brokers or portfolios, okay? I have my first one, which is with Trading 212. This is my long-term portfolio. I do not intend to sell anything within this over the next 20 to 30 years, okay? I dollar cost average into this every single month, and I just keep it going. As well as that, I have an algorithm that tells me when certain stocks within that portfolio are dipping or pulling back by anywhere between 6 and 8%, and alerts me to buy a little bit more, just so that I'm buying lower and increasing my average price. Second to that, I've then got eToro. eToro is my buy and sell portfolio. So I might hold these for 2, 3, 4 months in total. I will still dollar cost average into a lot of these stocks, and I will use another algorithm that will help me pick out even lower points with a slightly different strategy. So it's not a long-term hold. I am in and out of these every few months. And then third of all, I then have Vantage. Now, Vantage is leveraged trading. I am currently leveraged at 500 to 1, but on this platform, I am only spread betting gold, silver, platinum, and the SP 500. And I always use stop losses of around 1% maximum. For silver, 1.5%, for platinum, 2%. So I have put a lot of safety yards in place on Vantage. I'm not just freely investing or trading the way I do on the other platforms. Now in total, last week, I like to add all of these were up beforehand, and then on the Friday, completely shafted all of them, thanks Trump. Trading 212 is down £15 in total, so 0.2%. eToro is down $177, which is 0.69%. And then Vantage was actually up £80. It was £220, but then when the news came out, everything just headed south fairly rapidly and hit some stop losses. But you know what? It happens. The month before that, it was like £575, and the month before that, I think it was £400. So realistically, it's not bad. The way I see it, right, it's green, especially when you're using leverage. If it's green, it's good. Even if it's red on eToro or Trading 212, it gives you the opportunity to just buy more. So if you're ready, deploy the funds. Now, is this a good time to buy? I'm going to be waiting a little bit longer. I'm not going to start putting in any orders or opening any positions yet because we don't know what's going to happen at the start of the week. This could keep going down. So I'm going to keep a close eye on this and keep you guys updated with what is going on. But let's look into exactly what I bought in the Trading 212 portfolio, eToro and Vantage. So on Trading 212, D-Wave Quantum, okay, my main pot within Trading 212 is quantum mechanics. That is a thing that is said to take off after AI, kind of like the transition from one to another. It's going to evolve from AI into quantum mechanics. It's the next step up. So I had 3 new positions opened in D-Wave Quantum. I had 3 more in Rigetti Computing. I then had 2 buys on Micron Technology, 2 buys on Quantum Computing Inc. I then have 1 buy on Super Microcomputer, 1 on Tesla, because I do have another pot that is focused on the top 15 mega cap stocks in the SP 500, 1 on Eli Lilly, 1 on Vertiv, 1 on Meta Platforms, 1 on NVIDIA, and then 1 on IonQ. So kind of a mixed ball there. Now you may be saying, Ollie, why did you buy those? Once again, I have an algorithm that I use that it's a dollar cost averaging algorithm that tells me when to buy it when it drops, and when it goes up, just keep buying, keep buying, keep buying. If it drops, then I will usually open slightly larger positions. So position 1, as an example, quantum mechanics, I open it at £5 per position. When it gives me an alert for position 2 to open because it's dropped by 8%, I'll then open that at £10 in. If it drops by another 6 to 8%, I'll do £15. And I will keep doing that on all of these so I get the lowest possible price. I know that this is going to be the big thing in 10, 15 years. So I don't care about how much I'm putting into it because I'm not taking it out. I'm not thinking about it. If anything, a dip is fantastic. I love that. Bring it on. Keep dipping because I know it's going to go up at some point. Once again, all of this is my personal opinion, but I've done my research and that is what I see happening. Whether these companies are the ones that are going to do that is another question, but they are leaders in quant market at the moment. The next one was eToro. eToro, I only had a few positions open. Bloom Energy, that was a new one I opened a little while ago. Honestly, probably shouldn't have, but it looked good. And it's so far up and doing well. Eli Lilly, as I said, 1 buy on that as well. And then 1 buy for Blackstone. So only a couple of positions. I did get alerts on Friday close to closing of the market, giving me around 6 or 7 different alerts across the portfolio to buy more because of the dip that happened. So Monday, I will be keeping a very close eye on that, and I will update you at the end of next week. And then we have Vantage. Now, Vantage was a mixed bag. As I said, gold, silver, platinum, and the SP 500 are what I trade on there. Gold had a really good rally and some nice pullbacks, so I've got some good buy positions there as well. Actually, let's just go into it and I can show you what I mean. There you go. So you can see here, I had a few positions. So you can see here, I had a few buy positions open, which did fairly well. But ultimately, I did the one thing I said no, I would never do, and that was overtrade. I actually opened some positions that were not meant to be opened because I thought I saw a good opportunity in the market, and I was wrong. It happens, right? If you have a strategy, stick to it. Overtrading is the worst thing. You think that's a great buy opportunity, but if it's outside of your strategy, don't do it. Wait. I think my ADHD makes me impatient, and I get the bug to trade. And I am learning how to switch that off and zen and relax. So there were a few positions lost. I think there was about 80, 90 pounds in positions that were closed because of my stupidity. But otherwise, the rest here did fairly well. And that is a wrap for the portfolio. Now, I do this every week, and the reason I do this is I want everyone to understand what it is like actually investing in the market. It is not, sunshine and rainbows. It can be a bit emotional at times, like what happened on Friday. And I think the more money you have, and I say the less you have in, the more secure it feels. But if you don't have a lot, if you're putting £1,000 in, it's like the only £1,000 you've got, it's going to be panic stations if you have a 5 or 10% dip in the market. And this can dip more. I've seen it. Meta back in 2022 dropped by around 65%. That's a beast drop. I wasn't in it. kind of luckily at the time. Now I wish I was, because it's really pulled back well. But that does happen. But as I said, look, that's a wrap. Please do remember, everything I mentioned here is my personal opinion. It's not financial advice. Please do your own research and look into everything in a lot more detail, and that your capital is always at risk. But I hope you enjoyed. Do remember, subscribe to stay tuned. Next week, I'll give you another update. Once I have perfected these strategies, I am going to start sharing them with you so that you know exactly how to do it the way I am, and hopefully everyone can make a ton of money. So, fingers crossed. Peace. Take it easy.